Very good. Yeah, Ben Lynch, Cleantech Capital Advisors. We're a corporate finance advisory firm on cleantech resource efficiency segments. I've been asked to kind of set the context a bit for the energy efficiency track today. Seemingly a government representative was supposed to be here, but they kind of dropped out the last minute because of this election thing. I know government representatives, they know an awful lot about efficiency, and they probably would have been a better speaker, but unfortunately I'm going to have to do the job on efficiency in their stead. Okay, energy efficiency. It's all about energy harvesting and DRM and solid state lighting and distributed generation, etc. That's what some people would lead you to believe. In fact, it's much more complex than the technology. This is some analysis which has been done showing the various drivers and their relative ranking in decision making for various segments within the building energy efficiency space. And it's very, very complex, and I think I challenge any of you to draw some overriding conclusions here about what you should be focusing on in energy efficiency. So it's really not just about the technology at all. It's an enabler, but it's much more to it than that. This is some analysis from the International Energy Agency, the way they calculate the additional spend towards energy efficiency solutions versus, average efficiency solutions, the incumbents, so to speak. And they estimate that total spend at about $220 billion in 2015. There's transport, there's industry, there's buildings, etc. I think most of the companies who are talking here today are going to focus on that 12% of the pie. So there's a very huge pie there. And hopefully, we'll all be exposed to companies looking at the other 88% of the pie as well. The next slide, this is some data from Cleantech Group looking at, earlier stage, call it VC, corporate VC, and earlier investment into energy efficiency companies around the world. It's running about $400 to $500 million per quarter, or 40 to 50 deals per quarter. Some very large deals do skew this data. But there's quite a bit going on. I think for a while, people probably about 2-3 years ago, investors got really excited about energy efficiency, and then subsequently they realized that it's actually quite hard to get product and solutions, etc., adopted in the ultimate end markets. The next slide is in the background. You won't really be able to read it. That's not a problem. They would be what, as an advisor, we would characterize as general criteria that investors want to fulfill when they're investing in companies in the space. It's management team, differentiated technology, large markets, commercial traction, blah, 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 all that stuff that you hopefully all know about. What I think is specific to energy efficiency is some questions like, is it a new build or a retrofit solution? If it's a retrofit solution, what is the ease and the cost of that retrofit? Is it really just a nice gadget, or is there a demonstrable payback or ROI to that solution? What is the dependency on the rest of the value chain for my little part up here to get adopted down the road? How is the solution distributed? Is there a very high customer acquisition cost? And even though I may have high gross margins, I've got very, very low operating margins when I've taken the distribution, customer acquisition costs, etc., into account. And am I just fighting a better mousetrap battle? And if so, then I think it's going to be hard ultimately for you to succeed. And for us, these are some of the kind of particular questions and themes for energy efficiency within the broader clean tech and resource efficiency decision criteria from investors. The last slide is who we are, Cleantech Capital Advisors. I'll pass on now, hopefully with that very, very fast introduction, to the companies that make a living out of focusing and trying to succeed in the energy efficiency space. Thank you very much.